Hey, what's up with you guys? My name is Irfan, the owner of smarteaincubator.com, and welcome to my first YouTube video. I'm super excited, guys. In this video, I'm going to show you the best 5-minute strategy for scalping Forex. So this is by far the only video you need in order to be able to make consistent profits every month. I know you probably heard it a lot from the other YouTubers, but trust me, at the end of this video, you're going to get so much value out of every single step that I'm going to show you. This is the smart money trading concept. There's no regular support and resistance involved. There's no indicator whatsoever. It's a pure price action trading. It's by far the best 5-minute scalping strategy to trade Forex. So without any further ado, let's get into it right now. So guys, I actually came across a PDF from Kennedy, I hope that I pronounced the name correctly, Smart Money Entry Types, and I decided to download this PDF and show you some areas that are related to my video topic. It's going to be super helpful because I want to show you first what smart money trading is and how you can use it every single time. So guys, if I want to tell you a little bit about my background, I used to be a swing trader in 2019, and I was a swing trader for 2 years, and then I switched into a scalping because it's way easier for me. I wake up in a specific time, I trade in a specific time frame, and I'm done for the day. So that's the beauty of scalping. I'm going to show you exactly what my strategy is. So how does a smart money make profit? Smart money, or the market maker or liquidity provider, includes large institutions such as central banks, large financial institutions, etc. So these companies participate in the market by quoting both buy and sell price simultaneously in any financial instrument, with hopes of making profit on the bid-ask spread or turn, which is hedging. So one example, this is all you need, guys. This picture right here is all you need. Smart money concept is when big companies like banks and institutions put their sell or buy orders and make a huge impact on the market, whether it goes bullish or bearish. Sometimes you see big candles, or whether it's bullish or bearish, it means that smart money trading is involved. So I'm going to show you so many examples that makes it super easy for you, and I'm going to go on Euro USD. So I'm going to exactly explain what it means, how smart money gets involved in each and every trade, and when they are not available in the market. Because if they're not in the market, you don't want to trade, because the market is choppy, there's no clear pattern, and you can't easily follow those people, because you want to go in the direction of big banks and big institutions. That's all you need to do. So before I get into trading view, guys, if you still haven't subscribed to my channel, do it right now. Click the subscribe button, support my channel, guys. I have no course to sell you. Everything is going to be free on this channel. So please support it and turn on the notification bell, so next time when I upload a video, you get notified first. So let's go to trading view. This is what I use. I'm actually on Euro USD pair. I already identified some areas for you to get it ready for this video and show you exactly how I trade every single day. So I'm going to explain later at what time I exactly wake up in the morning and trade, and when I'm done. But for now, I'm going to show you this one right here. So let's say, I'm going to start with this one. I'm going to press the replay, and so let me go from, I'm going to, yeah, let's just do this one. You know, there's some areas that I don't want to put this one. Okay, so please don't get distracted by these two blocks here. I'm gonna start with this one. So in this area, as you can see, it's 10 a.m. Eastern Standard Time. So the market, the price is kind of consolidating, and then after that we noticed a big bearish candle right here. See this big bearish candle? It's a bearish engulfing pattern because bearish engulfing candle, because it got closed below the previous candle, which was the green one. See this green candle? It got closed below that. So here, after that, we had another red candle that actually follows the previous big candle, so it's showing us something. So this is going to be our order block. So you just simply need to go to rectangle tool and cover the whole candle, the entire candle from top to bottom, where the price opens until where it closes. And right here you see that we have a very small gap. So you gotta zoom in, you gotta cover the whole candle before it drops. It's very important, pay close attention. You gotta cover the entire candle before we have the bearish engulfing pattern, bearish engulfing candle, and then after that we see that the price left a little bit of gap right here. I'm gonna point it to this one. I'm gonna show you so many examples, guys. If you're confused, don't worry, just keep watching this video. I'm gonna show you so many examples, so next time when you want to trade, you look for gaps. Gaps show where banks are trading. Super simple. $500 courses show you this, so it's really worth it to spend more time. So we have a gap here, so it means the market left a gap and it has to come back to hit the zone, and then it goes toward the direction that it wants to go. So in this case it's bearish. So right here we have our gap here, and another red candle following the previous big one. So now we gotta wait for the price to come back and hit our zone, which is order block. So here is our order block. It means banks and institutions are trading. This is it. This is our order block right here. So we gotta wait for the price to come back and hit this zone, and it didn't. It didn't. But this is an interesting part. If I want to move forward, see, so let me just delete this one first, or yeah, let me just delete this one. If I want to turn it on, and if I want to show you exactly what's happening, see, I'm still waiting for the price to come back and fill this gap, because this is where banks and institutions left their order limits. So I'm waiting, and then I'm gonna turn it on to show you exactly what it is, and it finally reaches my level. So I'm gonna stop it right here. I'm gonna extend my order block here, and I'm going to show you exactly how it's reaching and how I can actually take this trade super profitably. And also, guys, I have so many live trading videos that I'm going to be sharing on this channel, so don't forget to subscribe and turn on the notification bell so you get notified whenever you upload these videos. So these blocks are for next examples that I want to show you, but right now I want to show you the most important and the most exciting part. So I'm still waiting until the price reaches this candle. See, I'm gonna stop it right here. I'm gonna extend it. Look at this. The price literally hit my zone. This is far. I'm not recommending you to go like for 2 months before to see how many gaps you have left. So this is not for super long time ago, and that's why I had to fill in the gap. So it's very important when your order block gets filled in, you gotta wait for the next candle, for the next momentum to see if that order block is respected or not. So what I mean by that, the market is definitely bearish, right? So it was bearish right here. It left a little bit of gap before it dropped. I have at my order blocks here, so there's a gap here. It had to fill the gap, but right after it hit the order block, we had a huge bearish engulfing pattern. See, so if you put your sell order right here and put your stop loss right here, you could have easily got a one-on-one trade. See, it's almost one-on-one. It's actually 1-to-90. But guess what? There's also a better strategy that I personally use most of the times. I put my sell limits right here on top, because I know that the gap should be filled. So why not just putting my sell limit there and taking a 1-to-1 risk to reward ratio trade. So if I put my sell limit right here, I'm going to put my stop loss exactly above this order block to give it some more space. And then, as you can see, it's 1 to 3 right now, but I'm not gonna go I'm not gonna get 1 to 3. I usually get 1 to 1 and then I'm done for the day. So but let's say that if I want to get the maximum, it's gonna be 1 to 3 risk to reward. So if I want to get 1 to 1, it would be right here. See, I know that there's a gap here, I know that it should be filled, so I wait for the price to hit my level, I put my sell limit here, my stop loss here, and then boom, as you can see, we got a profitable trade right here. And then after that, if I go forward, you see that it's gonna tap the zone again, but this time it's invalid, but it worked. It's a low probability trade if we want to re-enter again, because if it hits it once, then it becomes invalid, but in this case it didn't. See, because it actually tapped into the zone again, it gave us a very good candle, a very good bearish candle, and then the price dropped again. So if I delete this, you see that we have another gap right here, because the market dropped and this is the last bullish candle before it dropped. So I'm gonna put my order block right here. So it's very important where you actually put your order block. You got to put it in the last candle before it goes the opposite direction, which is this green candle right here. So we have a little bit of gap right here as well, but you got to see if it fits, if it hits this order block and reverses. So we don't know. We got to go forward to see if the price come back and fill our gap. If not, then we just move forward. So I'm not too sure about this one. I didn't check this, but I want to see if it does that or not. So right now, as you can see, the market is consolidating. I'm not even looking at the market this time. It's all it's 12 in the midnight, so I'm not trading that time, so it doesn't really matter for me if it hits this level or not. But I'm going to show you the other examples that I already specified. So another example is this one right here. So I'm gonna go backward again, and I want to show you this one. So although the market is consolidating, you see a huge bearish candle here. So what did it leave? A gap. How did I find out? I actually drew a box from the top to the bottom of the previous candle, which is the last bullish candle, which is the green one. And then after that, I noticed that we have a huge gap in between. See, after this candle dropped, the next candle never tapped into the zone. So it means we have a space here, we have a gap here, and the price has to go back to fill this gap. It's super important to notice that, guys. I can promise you, I can guarantee you, go get a 100k account, 200k account, you will be profitable with this strategy, and thank me later. So, and then here the price dropped here, and also we have another gap right here. So this is a smart money trading, guys. This is a smart money trading. This is where banks and institutions are involved, and they're taking their and they are actually placing their orders to go long or short, and they take their liquidities, they take retail traders liquidities that I'm going to cover in the next videos. Don't worry about it, I just want to talk about a smart money concept. So how did I notice that this is an order block? It's very obvious, because we have a bullish engulfing pattern, the big one here, and the next candle never tapped into the zone, so it left a gap here. See, it left a gap here. The price tried to come back to hit the order block, but it was never successful. See, it actually left a little bit of a space here, but it never tapped into the order block. So it means that it's still valid. So it went up again, came down, it went up, and then it came down, and this candle finally tapped into our zone. So it means we should be ready to place our buy order, because it's actually a very good bullish it's not a bullish engulfing candle, it's a really good buy momentum. It's a hammer candlestick that actually shows us that it's a really good time to buy. So if it was me, I would put my buy stop, not buy stop, I actually put my buy order here. But remember that you should always put your stop loss below the order block. But if I wanted to do that, guys, see, the risk to reward ratio doesn't look good, because it's a 1 to half risk to reward, which you don't want it, unless you want to put your stop loss here, which is going to be a 1 to 2 risk to reward, and then you close it exactly before the next gap. And if I go forward, I get stopped out. So that's the reason that you should always put your stop loss exactly below the order block, because smart money concept knows where you are trading, because they know that most people, the way they've been taught is that they just whenever you hit support buy, whenever you hit resistance sell, and everybody knows and that's why most of the people get stopped out. That is the reason. See, it came down, came down, came down, bullish engulfing pattern. Even this one is a good one to buy. So this is a very, very bad risk reward, so I'm going to remove it. But if I wanted to get it here and put my stop loss right here, this order block is still valid, guys, because as you can see, the price never tapped out of the order block. It's inside, it's trading inside the order block. So if I want to take my trade here and close it right here, I would put my stop loss exactly below the order block, and boom, see, it actually stopped me out. See, it actually stopped me out because of the it came down a little bit, stopped me out, and went up to my favor. But this gap is still not filled, because the reason is that you gotta wait for the candle to actually tap into the zone. So this is invalid right now because it actually came out of the box. It's become invalid. Now I gotta wait for this one to get filled. So I gotta wait for this one. Now it tapped into it. Now we gotta wait for the best opportunity to go for sell. So I wait for this one. Now I can actually sell it right here because I have a bearish engulfing pattern. I had this momentum here, which is it's not a doji, but it's a good morning candle, and then I can put my stop loss here and my take profit right here, which is 1 to 1. See, this is a profitable trade. So you got to look at the trend first, and then you identify the gaps for smart money concepts, and then you take the trade. It's very important, guys. You don't have to solve a huge formula that other YouTubers talk about, and they make you confused, and then actually they put some words here. It's crazy. I don't even want to talk about it. It's super simple. I'm not using an indicator. I'm not using any moving averages. I'm just using pure price action, and it works 80% of the time. So even right here, as you can see, it tapped out my zone, but it finally went up, which happens all the time. So this one is done, 1 to 1 risk to reward. I already got it, and it's a profitable trade. So it already filled the gap. Now this has become invalid. So can you see another gap or not? So a lot of people come here and tell me that, Irfan, we have another gap with this candle right here. Does it count or not? It actually does not, because if you look at it, you see that the price it has a shadow below this order block, and the price opened inside the order block. There is no gap in between that we should wait for to get filled. So if you see, if I want to actually move forward, you see that it's become invalid because it's not a gap here. A lot of people see this one, see, oh, we have a very, very good momentum to go sell because the sellers are pushing the price down. So I got to put my sell stop here, but you see that they get stopped out. This is not a gap. Not everything is a gap, guys. You got to pay attention to this. It's very, very important. So this is what I wanted to show you guys. It's super, super important. I'm going to show you one more example, and then I go back to the PDF to show you something else, which is it's not actually a smart money concept, but this is another strategy that could be really, really lucrative. So one more example for a one-on-one trading. So why did I draw this order block right here? So just if you think about it for a second, you see that we had a gap right here. So if I delete this order block and if I zoom in, you see that we had this is actually a little bit choppy. I didn't really want to show you this example. Let's move forward. This is actually a little more advanced that I want to show you in the next videos. So I'm going to go for another examples right here. So I'm going to go for probably this one right here. Yeah, this one is a really good one. This one is a really good one. See, we have a really big bearish engulfing pattern, huge candle, and it left the gap exactly here. So this is the last bullish candle, the last green candle, and let me just go for this one. Yeah, it's much easier. See, after the price dropped, it left the gap right here. It left the gap right here, but you should always wait for the next candle to see where it opens and where it gets closed, because it's very important, because we want to make sure that we have the gap. But if I move forward, you see that it actually left the gap in between. We had a huge spike towards downside, and the next candle after that left a gap for us, which is exactly right here. So we got to wait for the price to come back. We are confident about this strategy, so we know that the gap should be filled, and we put our sell stop, sell limit, or we can just open our sell order manually. So but we got to wait for the market to bring the price back to the zone. So if I go forward, you see I'm still waiting. I don't care what the price is doing. I just want the price to get back to my zone and feel it. So now I'm waiting. Oh yeah, this is where my zone is filled. So I gotta wait for this one. I gotta wait for a very good momentum. So but do I sell right here? I could put my sell stop right here, put my stop loss here, and put my TP right here, which is exactly 1-to-1. This is a 1-to-1. So let's see what happens if I put my sell stop here, my TP here, and my stop loss here. Here I should actually get it, because we have a very good candle, bearish candle. It's a bearish engulfing candle that got closed below this candle. So it means that it's going downwards, and it's actually respecting the zone. As long as the price doesn't go out of the order block, it means that it's respecting it. And if I move forward, boom, another profit. Super easy. Even if you don't want to put your sell stop there, you could have waited for this candle, for example, here. You could have waited for this candle here. You could have waited for this candle here. There's so many ways that you could enter, as long as you know which is the proper order block. That's it, guys. Don't overcomplicate trading. That's all you need to know. So in this on this YouTube channel, I'm gonna go over more and more examples. I'm pretty sure you will learn it. You have to learn it if you want to be a profitable forex trader. You just need to follow this channel. Everything is going to be for free. Although I'm not really trading myself, I have an EA that actually trades for me and get me 1.5 to 2% profit every day. So but sometimes, you know, when I want to grow another account, if I get bored, if I want to trade, I do that. And I created this YouTube channel to help you guys become a profitable trader. But I use an EA that actually does the trading for me on autopilot. So if you want to check it out, go to my website, smarteaincubator.com, and you see everything over there. So this is the next thing. This is the next example, but let me show you, because it's already too long for this video. I want to get back to this PDF and wrap everything up, and I'm going to show you the next example in the next video. So we had our candle here. This is exactly what I showed you. We had our candle here. We have a gap here. See, return to origin, which is our order block. And the market has to come back. The market comes down. It left the gap here. It goes back to the original, order block, and then it goes towards the direction after it stops out every single person. I talk about liquidity later on my channel. So I'm going to talk about this one later, guys, or actually I can wrap it up right here. But for support and resistance, I would like to cover it in the next video. This video is dedicated to a smart money concept, guys. As you can see, this is not hard. Why not just giving yourself a homework? I want to give you a homework. Go to TradingView, create an account. You can use my link below in the description if you want, and go to 5 minutes, go to 1 hour, go to whatever time frame you want. Find the gaps, back test it to see if it works or not. If you have any question, guys, don't hesitate to leave your comments below this video, because I get back to every single one of you and I answer your questions as much as I can. So if I want to show you one more example and wrap this video up, I will do that for you. That's totally fine. So I'm gonna delete this, and I'm gonna show you why I took this trade as well. So as you can see, another bearish engulfing pattern got closed below the previous candle, and then I have my order block here because this is the last bullish candle. So it's very, very tricky, guys. You got to pay close attention. Some people think that it's not a gap. It is a gap, guys. It's not 100% touched. If I zoom in, you see that this price, this candle hasn't touched the zone yet. So it actually left the gap right here. It actually left the gap right here. So we still have a gap. It's very, very important, guys. We still have a gap right here, and we gotta wait for the price to come back to fill in the gap. Even if it's a small one, it is still counts. Don't get distracted. So, and then I go back, see, it already tapped into my zone. So it's a very choppy one. I think there was a news or something, or the new session opens or whatever happened, but we gotta wait for another opportunity here to actually tap into our zone. So this is already tapped into. The next candle that we want to get is going to be low probability, but we see what happens. So we have a momentum right here, guys. The red candle shows us that it's coming down because it's a hammer red candle. And even if you want to get your trade here and put your stop loss, which I don't recommend, you got to put it here. We see that if it happens or not, and we can get a 1 to 2 risk to reward ratio. If it stop us out, we re-enter another trade. See, one more to see if it actually does that. Yeah, we could get it from here, 1 to 2 risk reward ratio. But I usually get a one-on-one trade. It's much easier, and I'm totally fine with that because 10 to 11 pips a day is totally enough. It can change your life, trust me. So it actually worked as well because you can see the momentums here. You can see that the order block is already tapped into, which I call it OB. It's order block. The price already tapped into. It came down. It went back up. It actually it filled it again, and then after that, the price came down again one more time. So that's how it's done. It's very, very easy, guys. You just need to practice. Give yourself a homework. As I said, go for EURUSD, go for GBPUSD. Practice it every single day. If you have any question, leave your comment below this video. If you like this video, even if you learned one thing out of this video, don't forget to like my video, guys. Subscribe to my channel, turn on the notification bell. Thank you so much for watching it, and see you next time.